Righto, money miners, we are back in the office. Jeez, after a great week in Sydney, boys. We've all come out with bloody the flu or COVID or something, but geez, what a week.
It's a bit of Sydney fever, mate. That's all it is.
Mate, courtesy of Stabos, the watering hole each night. Bloody what? Had a sensational time. We've got about 8 interviews in the bank that we're going to drip feed out over the next 2 or 3 weeks.
Yep.
Talk to some absolute ripping people. Met some. Oh, mate, we even went on the old. We even met old Mark Boris. Went on the potty. Bloody what a near you, GC. Bloody JD loves telling everyone his life story.
Oh, nothing better, mate. But it was a bloody fun 4 or 5 days. We jam packed a lot in. Met a bunch of awesome people, like you said, Matty. It was pretty cool. We came away much the wiser.
Oh, mate, the biggest GC we met, I'm not going to disclose who it was, but I will say his surname is considered a delicacy. The rich people eat. That's all we need to say, but possibly the biggest GC I've ever met in my life. Mate, special thanks. You can look forward to this, Money Miners, bit of a promo. We're not sponsored by Livewire, but geez, they fucking got good hats they gave us. They're just friggin' good hats.
They are really good
But
hats.
we caught up with James Marley and the Livewire team, did a bit of a collab on the Thursday, and bloody, it was awesome. We interviewed him about their business journey. They interviewed us, did a bit of a panel sesh with a couple of fundies there. But, mate, can't thank James and the team enough for hosting us and looking after us and booking out a room. Absolute GCs.
Mostly just for tolerating your behaviour.
Okay, but thank you, James, for trusting and taking a bit of a punt on me. I don't think that...
And how about bloody Ali GC for organising everything and keeping us in check for 5 days?
Mate, how good's our Instagram fucking videos now? Mate,
I had people telling me the Instagram was awesome while you're in Sydney, and I
don't even
what
have
they were
Instagram,
talking about.
No, we're amping Instagram up. We're into 4 figures now. You bloody watch. Right. Good times. Right, boys, today we're getting into some absolute fucking corrupt shit going on in the world of the TSXV, and we've got a geological expert to come in and just clarify why the hell all these reporting standards are in place. Trav, news from last week, NexGen doing some absolute random shit.
Some dog shit stuff.
Buying heaps of uranium with debt.
Oh, I'm going to have a bloody growl. Maybe.
Yeah, I'll break you up throughout,
Thank
mate. JD, what do you got, mate?
Mate, I'm going to talk about AVZ, Lithium, Firefinch, all in one.
Oh, look at you go, mate. And a couple other little specials at the back that you've got to hang on to, money miners.
JD, that sounded like the trifecta of shit to avoid.
Hindsight's 20/20,
Yeah,
mate.
it is. Yeah, you're right.
Now, boys, first cab off the rank today. Jesus Christ, has some bloody... some Bre-X memories, Nelly, you'd say.
Do you remember Bre-X?
Oh, not like...
Secondhand.
It's like I was there based on JD's recollections of it, from all the literature. Oh, mate, and to expand on this, now, audience is going to hang on. We've got the main man back on after a week, but there's no one more pertinent to talk about this little geological assay catastrophe than Rene Stirk. Thank you for coming on twice in one week.
Thanks, guys. Yeah, appreciate it.
Oh, mate.
What is the catastrophe,
Okay,
Matty?
now... It involves Red Pine Exploration, a TSXV listed company, RPX, that has on Wednesday on 1st of May, it withdrew all previously announced assays for their Wawa Gold project in Ontario after discovering inconsistencies, Trav, in certain results. Now, I'm not going to go into the specific details yet, but Mr. Stirk, your first pass thoughts on what the bloody hell is going on here?
Well, what's going on? I think I did a bit of the sniff test last time I was with you guys, right? And the question is, should this have passed the sniff test earlier on? But what's going on here, by all accounts, I mean, the company's come out and made this statement, so this is not me coming up with this, but they basically said the previous CEO has been manipulating the assay results. And look, that's, like you said, that's back to the Bre-X days. And it still happens. And after I've posted a bit on it online, there are other people coming out saying, unfortunately, it's still happening today. And remember, I was with you guys last week and I said there's only a small part of the industry that does shady stuff. This is pretty fucking shady.
Oh, no.
In this instance, so the lab was actually sending back the right results, but the CEO...
Only to the CEO.
Only just the CEO, and the CEO's taking the liberty to just fucking like put his own grades and meters into the Excel spreadsheet that he gets back.
For some of them, yes. And then forwarded that on to the internal team who were doing like the mineral resource estimate internally. So now that everyone's hanging on for dear life, I'll go through it. This project, so originally this Wawa Gold project, it had about 700,000 ounces in resource, most of it 471's inferred at about 5.4 grams per tonne. So we've said they've discovered the inconsistencies on April 29th, and then on 1st of May they've announced that they're retracting all these assays, and this includes all the assays that went into the 2023 NI 43-101 mineral resource estimate. Rightfully so, once they put this announcement out, the stock halved on the news, over-halved. So, look, and because I'll tell you what, if I was a fucking shareholder and this shit happened, I'd be hopping straight on a Brooks Airways Learjet. I'd be going straight over to Ontario and I'd be having some words with these individuals. Mate, don't worry about Brooks doesn't just fly to mine sites. They can fly you around the world in Learjets to track these people down that have lost your money.
Not just lost your money, mate. Lied to your face in the process.
Yeah. Maybe they should start another division, Rene, Brooks Security. Like you can take some backup with you.
I can imagine the people working there would be pretty disheartened themselves, right? I mean, I'm sure there's plenty of good people working in the company as well. I'm sure this wasn't a group effort, right? But you'd be certainly very disheartened. If you look at CEO.ca, I'm sure there's a website similar to Hot Copper on our side. You can see some people being pretty upset about it, and so they should be. I mean, this is literally what we try and protect ourselves against.
Yeah, so this is what, as you said, the company's put out multiple statements, Red Pine Exploration. So this is from their statement. So they said correct drill hole assays, as you said, Trav, from spring 2015 through to January 30, 2024 were sent by the lab to the CEO only. And look, they don't mention the CEO specifically in all the article in the announcement, but they say former CEO. We can look at Quentin Yarry held the CEO role from July 2015 until February 2024 this year. So we can assume that this is the former CEO being referred to. Now,
so this grift has happened for 9 years, and that 9 years matches up with this CEO.
With that CEO, wow. Yes, we can infer that.
It's like a missing jigsaw puzzle piece, Matty.
So some of the results were manipulated by the former CEO. He then forwarded all the assays, which included correct ones and manipulated ones, onto the internal staff for download. They were then used for the in-house resource modelling that fed into that 2023 NI 43 resource. Now, in total, this looks like the company has said it could reduce the amount of ounces in their resource by up to 86,000 ounces. So that's 12% of the total resource. And I'll bring up the exact numbers here from the announcement, but you can see that all the ounce reductions are at grades much higher than the grades of those sections. So it just shows that they're really beefed up.
They've added a high grade zone. Yeah.
No, they've made high grade zones.
Yes. Yeah.
Beyond the actual, because they're much higher than the average grade. I'll just play a quick snippet of one of the investor relations pieces I found for this company with we assume was the former CEO.
The project, as we mentioned, the existing resource is just over 5 grams per ton. If you look at our results over the last year, we're very consistent with that grade.
Yeah, well, of course the grade's going to be fucking consistent when you can just do some Excel jobbies on it to change it. So, look, that's what's going on. And we asked you the question, Rene, the other week. The why the need for reporting, and why not just let investors make their own decisions? I think we've got the answer, Cobber.
Yeah, look, I don't want to cover all ground, but that's exactly why, right? I mean, otherwise, if you don't have rules, then these kind of things happen. And people are quick to point out, even though we have the rules, it still happens, but at least we find them out, right? So, and really what should have happened is a couple of things. When you get these assay results, they come in a certain format, and that format should be audited, and the raw files should go straight into the database by the database people. So, I mean, that's been pointed out already online and is easy to do. But the key thing here is audits by the right qualified people. When you would have a second opinion, you would have a consultant come in, you would have a third party come in and audit this stuff. And that's the stuff that we do as well. We look at, okay, is there any ambiguity around the assay results? Because I've seen this before, actually, later than Bre-X, or project here in New Zealand, where also people have added some assay intervals to the edges of vein intervals, right? Very shady stuff again. So it happens. And, we have to be on the lookout for these things. And if these audits just happen and the rules are followed, then you should see less of them.
Yeah. And did you think this would, and for the exact numbers, it was 532 assay results out of 98,000 drill core assays. So it's like, it's that marginal amount that just mightn't get noticed. Like there's a means behind the madness here. Did you think?
Are they certain about that number yet, or could it still get worse?
That's what they've they've disclosed in their announcement. Right. So, did you think it'd happen again with everything in place these days, or you thought it's probably happening and this one's actually being caught?
Oh, look, I'm sure that there are other examples out there. It's just people do what people do. So it will keep happening again. It's a very small percentage, as I said last time I was on the podcast with you guys. So it's difficult to find these things, right? Because especially if they're so sophisticated, if you just smudge a few samples, then I'm sure somebody would say, some samples may have not been aligned, but in a competent person's opinion, most of it is correct, and off you go. That could have been the thing that they're gunning for here. Just move enough of them around for it to have a positive impact. But, why would you do that if you're working at that level of the industry? It just blows my mind, to be honest. But it's crazy. I'm gobsmacked by this. It's definitely one of the bigger ones that we've seen in the last 5 years for sure.
Rene, can you speak to the auditing process? It's something I've not been privy to, not been on that side of the table in the past, but should that have been reported in any announcements coming forward? Should, in retrospect, could we have seen anything saying, audited by XYZ, those sorts of things?
Look, it's an excellent question, and it is actually something that is in the JOR code. For instance, in Table 1, you have to report about any third parties that have audited or checked certain intervals, and particularly if you got high-grade intervals, that's something that the code would have you do, right, to make sure that you re-assayed it, or somebody else has looked at it, or you make sure that it isn't this one person who's been involved with that particular sample, that there is some chain of custody. Chain of custody is discussed in these codes as well. So from an auditing perspective, there have been a few others on our side of the ditch, as I jokingly call it, where a third-party consultant had looked at the data, and their job was to indeed see whether the resource was based on good data and it was done by the proper techniques and tools and so on. The problem is with these audits, we don't have an actual format in our industry. We don't have an ISO document like the financial institutions in the finances world. They have ISO documents that tell you how to run a finance audit. We don't have any of that. So when we get asked to do an audit, it quite often feels like a bit of a rubber stamping exercise where you only get to look at a few things and you go, oh, well, this kind of looks okay. Here's a document that has no structure or otherwise standard format that says some waffly language about, it looks okay. I think there's more to do in this space, and we certainly discussed with this updated JOR code as well the need for a peer review by a third-party consultant for certain resources or reserves. So I think this puts that in the spotlight. We need to do more, and a good audit would have picked this up earlier.
Oh, well, to go straight to the lab now, mate, not the company.
Well, that's it. So when we do these audits, we ask for the original files coming straight from the labs. That's what we look at, right? And there's a good practice. So you look at the samples in the core yard. So you have the pulps sitting in brown paper bags. Then there's a core, there's a core box with a core label on it, and there's a certificate from the lab that has that sample numbers. And when I go to site, I look for all those things. I bring those up and I put it all in the same core box, all on top of each other. Take a picture and say this matches exactly what I'm seeing. That's doing a proper audit in my view, right? But then that's still just, you're just taking a stab in 100,000 samples. If you do 20 of those, what have you really found, right? There is certainly so much you can find and some of these audits are big audits. We do 12-day audits for bigger companies. But in one day for a junior, what are you going to find? So there's stuff to improve on for us as an industry.
Very good, mate. We'll be watching this closely to see if there's any prosecution that comes out of it.
I'm probably saying the absolute obvious here, mate, but this is a fucking joke. It's a disgrace to the industry. People wonder why mining and exploration has a bad rap. It's because of shit like this happens. We need to fucking get rid of it from the entire industry. Everyone's on the same page here. Drain the swamp of these fucking like people who perpetrate this stuff at the expense of shareholders. It's disgraceful.
And Rene, you put it perfectly in our conversation last week. You need repercussions. There need to be repercussions for things like this. Otherwise, it just goes on. So I think, that's all we'll sort of say to it.
I'm going to watch this. I'm interested because at the end of the day, you never, want to end up in that space. Obviously, if you do your work properly, you don't. But seeing these things and knowing it exists gives us as consultants as well a better handle. Hey, this stuff happens, so we better look for it. The last thing you want to do is say, "Stamp, this looks good," and then it comes out, man. That's even worse because we had systems in place, we have rules in place, and it still failed, right? That's something we need to work on. But yeah, you're spot on, guys. This shit needs to stop.
And there is a quantifiable damages that can be claimed here. Like if you just literally look at what a person bought, their share price. The share price they bought shares at to what it dropped to afterwards, there is like each individual has a damage claim effectively, and they should be entitled to that fucking money. Yep. But that's the whole thing. Everyone just goes into bankruptcy or liquidation and just wipes their fucking hands clean of it.
Yeah, well, you should, for a laugh, ever read what they are doing on CEO.ca for this company, because that's a live version of shareholders being pretty unhappy.
Yeah, right. I'll have a look at that. Righto, Rene, thank you very much for joining us, mate. Our what do you call them? Foreign geological correspondent.
Yeah, I'll take that over Renegade any day.
Righto, Cobber. Thank you very much, mate.
All right,
have
mate.
a lovely day.
Yeah, guys.
See you, mate.
Beauty. Ugh, yeah, not beauty. Fucking horrible. Anyway, we'll keep you posted on that, Money Miners. Next up, naughty NexGen. Jesus Christ. Because you've got the best uranium deposit in the world means you can just throw cash and do random shit, apparently.
Apparently, Matty. But share price. Look at share price. Went up.
Fucking down 10% odd on the CDI today. So there's obviously always the lag between America and everything. So
it's worse when you look at the last few days' performance. But mate, this is the financing deal that has blown up Twitter more than any other in recent history that I remember. I don't know if you guys missed it.
Not just your random Twitter folk, fucking reputable Twitter folk. Like
mate,
Rick Rule's doing videos on it.
I'm going to play it. Mate, we're all over it. Yeah.
So, I mean, off the cuff, I don't think you need to read Twitter. You just open this announcement and think, hey, this is bullshit.
It's baffling. It's honestly baffling. You must, mate. I'm angry and I haven't even started talking about it yet.
Righto, Trav. Big fella, get it off your chest.
So, like NexGen, the uranium developer sitting on the world's best undeveloped uranium project, potentially even the world's best undeveloped mining project.
Yeah, which is true, which you would argue is true.
Potentially true.
Yeah.
They conducted the most baffling financing to buy physical uranium pounds. They issued a convertible note. The high-level details, a Canadian fund called MMCap has provided NexGen with US $250 million. In exchange, NexGen has promised to pay MMCap a 9% coupon per annum for that amount every year for 5 years. 2/3 of that's going to be paid in cash, so 6%, and 1/3 paid in shares. After 5 years, MMCap basically gets to choose whether they want NexGen to simply pay back the $250 million cash or convert that amount into NexGen shares at a fixed $10.73 US per share. Plus MMCap, you got a 3% establishment fee on top of that, equal to about US $7.5 million worth of NexGen shares. And what did NexGen use the money for? They bought 2.7 million pounds of uranium concentrate. So that was the details.
So uranium, like just U3, yellow cake.
Yep.
U308. Yeah.
Exactly right.
Yeah.
Worth chucking in that they'd done a cap raise, what, a week before?
Fucking less than that, wasn't it?
Oh, mate, 100%. I'm going to get to that. So this is the most baffling deal I've seen for a company of this size in my entire career. NexGen, so the company, they just launched that $250 million placement to ASX investors the week before. So a bunch of ASX institutions bid in the placement for shares at Aussie 13.03 a share. And at the time of that announcement, it was a tight 5% discount to NexGen's last traded price. And now, given the market reaction to this dumb as batshit convertible issue, those instos are coughing up a 20% premium for the shares compared to what the current trading price is right now. And they don't even have the shares yet, right? Like, they're set to settle in 2 days' time. So imagine
they're holding the bag.
They're paying 20% more for shares than what they're currently trading, and that happens in 2 days' time. Here's the thing, like, when the instos participated, they were not told about this convertible. So this came out afterwards because, when those shares get settled in 2 days' time, NexGen have to put out a cleansing notice. So in cleansing the market, they've executed this convertible. That's their obligation satisfied. But the instos who tipped in didn't fucking know about this. Yeah. And just look how the stock has been belted over the last few days on this price chart from Spark here. Just absolutely savage from that, 13.24 down to 10.87, in Aussie dollar terms on that CDI, and rightfully so. Like, let's just think through the reality of what this convertible note means for NexGen. NexGen are going to pay US $22.5 million a year in interest for the next 5 years. A pre-development company, they're pre-construction, right? They haven't built this yet. They're still waiting on permits. Don't know when that's going to happen, but they haven't. This is a convertible note for a company that is not even in construction yet. Since the announcement of the financing, NexGen has shed US $850 million in market capitalization value. One interpretation of this, per Koala's analysis, is the market is reacting as if they have paid $850 million for 2.7 million pounds of uranium, i.e. an implied price of $315 per pound if you think their value is a sum of the parts sense.
Yeah.
So why the shocking market reaction to the deal, right? Firstly, they didn't need the fucking pounds, right? Like the debt, any debt finance, project finance contracts, that they aren't going to be entered into until federal permits are here, and that process is how far away now? Like, there was a 2-year ticker, and then it's been paused 4 months in. Like when are the permits going to be here? Well, you're not going to enter any bloody contracts until you've actually got permitting. No one's going to provide a forward sales agreement until they know the date that you've got full permitting, right? So they didn't need the pounds. Number two, if you can muster a rationale to buy pounds, if you want to say they needed the pounds, well, they didn't need to do this dumb financing to buy them. They were sitting on boatloads of cash, especially after the Aussie raise completes in a couple of days' time. As one fund manager said to us in Sydney, if I wanted to own physical uranium, I'd just buy a sput myself. But I own NexGen because I want to own their future cash flows from mining. So this was a $6.5 billion company. Their cost of equity capital is so low, there is no reason for a company of that size to issue a convertible note. It's a joke.
I'd argue that if they then bought pounds with that cash, the reaction would have been even worse.
With their existing cash?
With the cash they got from the raise and existing. If they then use that to buy pounds, I reckon it would be even worse.
I don't think so, personally. Yeah.
Regardless, you've got to put up a use of funds. You would have had to tell the shareholders what they're investing in that circumstance, Matty.
Yeah.
Yeah, well, that's saying why they couldn't do it.
I think what's compounded things for them is that this one, this one eyebrow-raising incident has not come in a vacuum for NexGen. They are repeat offenders, and I think that's why they're being punished here. I can rattle off some of the really peculiar things about this management team that to us indicates a complete incompetency when it comes to allocating capital. Firstly, They sponsored Aston Martin's Formula One team, a company without revenue, promoting what exactly? They don't have a product yet. And even if they produced a product, there's nothing that differentiates your product from anyone else's product. What are you promoting? What do you get out of it? Why the fuck are you sponsoring an F1 team? What is the commercial case for spending shareholders' money sponsoring an F1 team? Is it because you get a corporate box at the fucking races? Is that why you're doing it? What a fucking joke.
I don't think it'd be cheap
Peculiar.
to sponsor the F1, Aston Martin F1 team, especially when you're not generating any revenue. Do any of our sponsors not generate any revenue?
They all generate revenue, Matty.
Well, that's usually the first thing we actually check.
Matty, I wouldn't take their money. They'd have nothing to freaking pay with in most cases.
Yeah, well,
Say,
that is the
run your
case.
business better.
Well, who do you reckon generates the most revenue out of our one? Out of all of them?
Oh, geez, I don't know. Well,
Have
DSI
to
is
be-
owned by Sandvik.
It'd have to be DSI.
Yeah.
I'd say.
Yeah.
Because they're the second biggest revenue generating company in Sandvik, actually. So that
I remember that.
it'd definitely be them. Mate, the world doesn't survive without mesh and bolts, boys. So, mate, could you imagine if Amazon didn't exist, Trav? If you took them away, how would you deck the office out?
I'd have way more money.
Mate, DSI doesn't exist, mate. Underground mining, as we know it, would friggin' end. Imagine trying to permit everything as an open pit. Mate, DSI allows mines to be permitted. Anyway, Trav, what else is a bit peculiar about NexGen that you've found? You wouldn't have to have looked too hard.
Like, we've all heard stories about how NexGen literally mails gifts to both buy side and stockbrokers. We're talking expensive gifts like watches. Like, what the fuck? What are you doing?
I saw someone with a NexGen watch.
Yeah.
Yeah.
I've seen heaps of them. We've all seen them. Like, what other
You
company?
sit next to them and they've got a little engraving on it, NexGen Energy Limited. What the actual fuck? Come on.
Okay.
So I don't accept hats off people that generate revenue.
This company
and
is
T-shirts.
pre-construction. They are not building a project yet. In fact, they're not allowed to yet, but they're spending money like no tomorrow. Their general and administrative expenses are so ludicrously obscene for a company that is doing what exactly, right? And here's what Rick Rule has to say about that point in particular.
Oh, yeah, I know, Rick.
NexGen's financing would seem to be in support of general and administrative expense. It's a convertible deal that allows them to borrow money convertible at 9% to buy physical uranium after the uranium price has gone up from $20 a pound to $97 a pound. Very, very different financings. If NexGen can explain to me and all of us why it is they did this financing, whether or not they bought the 2.7 million pounds of uranium to have enough supply to enter into forward sales contracts. In other words, if they can justify the transaction, I get it. But the company already had a lot of cash. I note that the company is pre-development. They aren't even in construction. And the last quarter, they ran in excess of $30 million in expenditures, which is to say $1 million a day for a company that isn't even under construction yet.
Craziest thing is, if you listen to their last quarterly call, the CEO, Lee, actually had the nerve to say their corporate costs were low. They're industry leading. Listen.
NexGen since incorporation has deployed approximately $451 million in the successful development of the Rook I project and other exploration properties against the current market capitalisation of 5.4 billion Canadian, all whilst maintaining an industry-leading low ratio of general and administrative expenses relative to development and market capitalisation in any given year.
This is really worth peeling into because I hear that and I feel the urge to bang my face into a brick wall. Seriously, like, fuck. Lucky me, I found the data Lee is, keen to spin and defend his position within NexGen's notice of meeting circulated last week. Look at this chart. Chart number 1, general and administrative spend per dollar of exploration and development spend as of December 31st. And he compares NexGen's de minimis spend on G&A versus a select pool of uranium peers. And if you read the notes section, you realise the peer group is a load of shit. Their definition includes, permitting for development spend. They are excluding a giant line item of their own being share-based payments from the definition, which blows them out massively. And then look at what they are bragging about in their own chart. They say they are spending 43 cents in G&A for every dollar spent on exploration and development. 43 cents. Ignore the fact that their calc is lowballing, like I just said, and try fathom that. What a fucking piss take. Chart number 2. This is a beauty. General and administrative spend as a percentage of market capitalization. What a fucking stupid metric. So this is to shareholders, right? This is what management thinks of your intelligence. To dish a chart like this up to you, they must think you are idiots. This is a pre-construction company with a giant market cap because it's a brilliant deposit. You need to comp it with other pre-construction companies, and we shouldn't hold you to account, proportionate to your market cap in terms of what you're spending on your overheads in that sense. You don't have a license to spend more as your market cap rises. There isn't proportionately more work to do or more people to hire as your market cap widens. You don't have more projects to administer or more permitting work to do just because your market cap got bigger. That's a load of fucking shit. This company drives me insane thinking about how they think about the cost line items. And people who defend it, they point, but the share price has gone up, That's got nothing to do with what management have done to date.
No, it's one of those unfortunate fucking cases where when you've got the best deposit of something, they feel like they can spend shitloads more money just because they got the best deposit. It's like you shouldn't disrespect the deposit like that.
Matty, you're dead right. And every time we speak with shareholders about this, they say, yeah, but it doesn't really matter. Oh, just look at the size of what they got. It's the best bloody blah, blah, blah in the world, And you can see from the reaction in the past few days, management's actions fucking matter. They have started, look at the value they've wiped off in the past few days from their actions. It is coming back to bite them.
Yeah. And look, there's so many dubious things about this company, and they're covered really well by Praise KEK on Twitter. I encourage you to look at his work. He talks about CFO turnover. He talks about board members with conflicts. He talks about a colourful history of the guy that they've got running their permitting work stream and some potential environmental mishaps that he's overseen. And look, I think the koala puts it well when he says this, which I've highlighted in this tweet: literally watching a management team milk a tier 1 asset for all it's worth personally while saying stock price, bro.
Yeah. Yeah. And I think, look, this is what you say, JD, it doesn't matter, is true to a degree, because when you've got this fucking deposit, someone's going to buy them eventually, and it probably doesn't matter, but it will. This sort of stuff does. We've seen how much value has been wiped off by what they've done. Really affects the multiple they're trading at. They're not a multiple of anything yet, but it affects what the market is valuing them at. And as you said, they've just wiped a shitload off by and they've essentially burnt all the relationships with the institutions that tipped into that capital raise.
Totally.
It freaking matters so much. And if a great counterexample, if you read the book, The Big Score, on how Friedland acted when he sold Voisey's Bay, that is at the complete other end of the spectrum of a world-class asset that went on to be sold for top dollar. He got, companies going at each other, in a bidding war to bid for that. And that is the complete opposite end of the spectrum, because he owned so much of the stock. His incentive was different to what these guys are doing here and now.
Yeah.
So here we are. I think the tide has actually turned, given the share price has responded this time to, very dubious actions. And NexGen has an AGM right around the corner. I'd encourage shareholders to actually read the resolutions and make informed decisions when it comes to voting this time. But unfortunately, Matty, JD, you can't vote on the remuneration the execs want to pay themselves because they don't let you. Check this out, right? The board and its advisors view say on pay, which is voting on pay, at this stage is not appropriate given the company is in its development stage and has a committed philosophy of attracting the very best candidates for this generational Rook 1 project. The complex and competing nature of all the various work streams to advance the project at this time requires extensive knowledge and understanding, and the company's compensation structure must reflect the continued evolution of the company. What a fucking load of shit. Shareholders should have a right to vote if they think your remuneration is out of whack, which is what everyone in the fucking world thinks about this company. You boys know what I think. A world-class project deserves world-class management and world-class governance. It's time to drain the fucking swamp.
Too right, mate. That governance is appalling.
Leave it there. God, talk about a positive news day. AVZ delists, and look, the whole Lithium Firefinch saga has some more advancements. JD, take it away, mate. What? Tie in Africa.
We're going from one positive story to the next to the next. So I'm gonna talk about these three companies together and sort of pull out a couple takeaways at the end. I'll get into them in a moment. But to start with AVZ, they're no longer going to be listed on the ASX. It's pretty unfortunate for all the shareholders, the passive funds, everything involved. It's not a great, point in time in which we're at. It's not the end yet. Shareholders are still going to maintain their ownership. It's just, another step harder after 2 years of suspension. Now, you got this other story that's unfolding with a lot of similarities in Leo Lithium, and we've spoken about it a good few times in the past. They came out with this announcement last week that's definitely worth talking about. So Leo as well has been suspended for quite a while, 7-ish months now. They went into suspension, they came out for a week, and then they've been in suspension again since September, October last year. But the story goes back a long way, and we did a full episode, which we've referenced in the past. It's in the show notes, so you can just click on it and watch it if you're interested. But the sort of long story short here is that Leo was spun out of Firefinch. Leo's focus was Goulamina. It's a lithium project in Mali. Firefinch's focus was the Marilla gold mine, also in Mali. Now, that occurred in mid-2022. At about the same time that Firefinch hit trouble, they went into suspension and have been in suspension ever since. So Firefinch ultimately just chucked the keys for Marilla, fled the country, and now they're really just a shell of a company. And despite Firefinch and Leo being separate companies, the actions by the government in Mali have been deemed sort of one and the same. So that's a bit of a refresh to give a bit of background.
So last week's announcement, JD, what happened there?
All right, so there was quite a few parts to this one. You've got an MOU, a Memorandum of Understanding, being signed with the Mali government and Leo. So it includes a US $60 million settlement that's, of course, rolled up a few Leo shareholders. Now, they also completed a previously announced sale of 5% of the Goulamina project to Ganfeng for US $65 million. So this cash will fund the settlement to the government. Leo also confirmed that Mali's new mining code applies. Now, guys, that is 30% government interest plus a 5% local stake. That is crippling. That's a crippling amount of government ownership.
And was it 10 before? It was 10 to 20 before, wasn't it?
It was sort of 10 plus 10, if you kind of will. So it was 20 essentially, but that's a whole nother rabbit hole to go down, which we'll save for another day. But here's the big one in the recent announcement. Ganfeng agreed to buy the remainder of Goulamina from Leo. So 40% for US $343 million. Now, Leo just point that out as being worth 43 cents per share. And for reference, they went into suspension at, I think, 50.5 cents. So a lot of people just ran with this number straight away, but it's not the actual number that shareholders are going to get because you've got taxes and a few other sort of fees to bear in mind. But I saw some analysis by the investment bank Jarden, and they put an NPV of these payments at 33 cents per share.
So if you look, if you compare it to that old 5% JD, 5% for 65, that would have been worth 40% would be worth 520 million. They've paid 343 for this 40% chunk.
Absolutely, Matt. You can see clear as day. Leo are not negotiating from a position of strength. By any NPV analysis of the project, 40% is worth well more than $343 million US dollars. So they're just in a very tough position, and this getting them out of the whole scenario is the way that management thinks is, the best way to go. They clearly don't think it's going to get any better. There was one more detail. Ganfeng also agreed to pay 1.5% of the gross revenue, essentially a royalty, for 20 years. It did have a cap on it. Again, pretty detail light on this note, but Jarden had put a circa 70 million Aussie value on this, which equates to roughly 6 cents per share. Now, bearing in mind, the company ended March with $69 million Aussie in cash, and they went into suspension with a $500 million market cap. So tying it all back together, you got Firefinch, who also came out with an announcement. They're going to pay $11.5 million to Leo and settle some other debts. That is subject to shareholder approval. They're also going to transfer all their interests in Marilla to a Malian government company. But here's the kicker. The Malian government refused to allow Firefinch to get a shareholder approval vote on this one. So they've agreed to it anyway. Now, Firefinch added that the communications, as we'd all sort of suspected, had gotten so bad between Leo, Firefinch, and the government that Ganfeng is essentially just the intermediary through which all these discussions are going. So having seen all that, having seen what Leo are going to get, what were your guys' first thoughts on the value they're sort of getting there? Going into trading halt roughly 50 cents, getting 39-ish. What did you guys think?
Yeah, you're not going to be thrilled, right? Like there's no world here where you as a Leo shareholder, I think, like leave everything that's happened here and have a smile on your face, because it's just it's been a really, really unfortunate ride for what is a bloody tier 1 project.
Yeah, I'd, to be honest, like say 33 cents and compared to 50, so 60 cents on the dollar. Geez, I'd take that ahead of nothing. That's the thing.
Yeah,
At least they're getting something.
Put it in the context, lithium price was well on the way down, but it hadn't hit its bottoms yet either. So I'm probably, in your kind of camp there, Matty. I think this could have gone a whole lot worse.
They could be an AVZ situation.
Yeah, exactly. Like, which we'll get to. So it's not a good outcome, but I think it could have been a whole lot worse. And I think ultimately it's the right thing to do for management. It's the relationship with the country was so fractured. I think they would have had pretty good grounds to go to international arbitration and keep fighting it. But, how long is that going to take? That would have taken.
I don't know what's going on behind closed doors and everything, but they've got some sort of outcome for shareholders in a place where the government is just has taken control. So
in a lot of ways.
For Leo Lithium.
Yeah.
Yeah.
Well, I think the most disappointing thing about the outcome, though, is that, like, Firefinch didn't come to the party. Like this is the thing that no one, was willing to sort of talk about publicly. But, like, in what world is it okay to just abandon your liabilities and say, fucking not mine, sorry? Like, that's an atrocious way for an Australian company to bloody operate. Like it's deplorable, in my opinion.
I couldn't agree more. And that sort of gets me to the point I was going to say. That $60 million that Leo has to pay to Mali, that is the bit you're going to be just biting your tongue about. That would be the aspect that would piss me off most as a shareholder, that you're having to pay that up essentially for what happened at Marilla, for what Firefinch did with, they're separate companies. And that was a point that Mali, really wanted to flesh out. But we all know that they were sort of separate companies. Firefinch had a 17.6% shareholding in Leo, but from when they were spun off, it's Leo that's now having to pay the price for the actions that Firefinch took. So, I mean, I think that sort of says everything that needs to be said on that point. Although where we are now, you don't get any clarity as a Leo shareholder on what a distribution looks like. The company hasn't actually said, they're working on relisting and getting the stock trading again on the ASX, but no timeline on that. And it's going to be bloody intriguing to see where the stock trades when it opens, because I bet there's a whole bunch of instos as well as retail shareholders that are just going to be fed up. They're going to be pissed off and they're going to want to get out and they're going to sell the thing. But there's a relatively solid, permitting that the deal gets through, amount of cash backing at the end of this. I said the analysis there. That's almost 39 cents if you assume they sort of both get, kind of completed or go through. So 39 cents, like, to be honest, I'd be surprised if it came out and traded at around that level, but we'll sort of see. And just to round it off there on
just quickly,
AVZ,
sorry, JD, on the royalty, like that'll be a pretty attractive royalty to certain funds. And what you do see with royalties that actually have like realistic near-term cash flow, which this does, right? They often like transact at like 2 times NAV. You know, you pay more than NPV for it.
Yeah, if I was a shareholder, I'd press the company to just, liquidate it. I don't want this shell to have this thing. I mean, I dare say management will want to keep it and look for the next thing to invest in. But if you're a shareholder, I'd be inclined to press for a distribution on the payments and for a sale of that royalty to whoever wants to buy it, because we know Goulamina is a quality asset. We know it sits, relatively low on the cost curve. The Chinese don't seem to have the same problem operating in places like Mali as Australian companies. So, it's not the safest royalty, but it is quite attractive. So I think that could go for a decent amount. So I'm fascinated, like you say there, Trav.
I think it's statistically you give yourself such a better chance of operating in Africa if you're Chinese. It appears.
Or Robert Friedland.
Or Robert Friedland.
Well, I mean, Kamoa-Kakula is owned just as much Chinese as it is
as Robert Friedland. Yeah, I think that's why.
Get both. Yeah.
That's why
and
he's
just
taking it easy.
Yeah, just on AVZ there, I mean, surely a similar type of outcome would be, would appeal to AVZ shareholders. My gut tells me they won't get as lucky, if lucky are the right words as Leo shareholders, but who knows? I think there'd be a lot of shareholders that would press for an outcome like that and just be done with it after not being able to see their cash for 2 years now.
God, imagine if, as you said, JD, like Zijin, equal shareholders in Kamoa-Kakula with Ivanhoe, 39 point something percent, 38.
Yeah, round about 40.
It's a bit under 40. And you imagine if they got ownership of AVZ as well, and started operating which they bloody looks like they might eventually one day. They
are. I mean, Ganfeng are the lithium experts. I mean, I'm sure they'll be going after it, mate.
Imagine if Zijin and bloody got, the world's best copper project and the world's best spodumene project. So, because I'd say your class AVZ is better than Greenbushes.
Nah.
Bigger,
lower strip.
I mean, logistics are a bit of it's in the middle of Africa there as well, so not quite as close to the port and stuff. But
I don't think it's not as high grade, but Jesus Christ, it's got some
it's not.
Thick as a motherfucker.
Yeah, she's long lived. So, I mean, there's a couple other takeaways on all these sorts of stories, and to me, it's that, it's not just jurisdiction that matters. People often label countries investable or uninvestable, and it's just not that black and white to me. You've got a company's history, the in-country relationships, the sort of social standing, and the people you are backing and how they build those relationships are super, super important. And there's something you've just got to understand as a punter, because there's other companies in Mali, and, it's not the safest place in the world. I think it's going to turn off a lot of exploration companies, but there are companies performing, they're operating in country there, and they just get the job done. So the people you back really, really matter. And, I think in the meantime, it just means, like you say, Matty, Chinese groups are just going to hoover up more and more assets across Africa, because Australian companies, TSX companies will be scared of it. And it's a bit of a shame, but yeah, you got to really know the people you're backing and the history behind how they got the assets and all these sorts of things, because they are totally applicable in AVZ's case, Firefinch's case, and Leo's case, and it'll no doubt be the same with different names and different mines and different companies going forward.
Righto, boys, let's get back on home soil for a bit. Australia, courtesy of The Australian. Bridget Carter Data Room article come out on 12th of May about Gold Road keeping options open into grey mining equity raise. But look, we've said before, lads, before the Greenstone M&A news coming out, what was that, a couple of weeks ago or so, that, Gold Road being this, non-operator of Gruyere and the De Grey thing, they were probably seen as a bit of a M&A target, but the whole Greenstone thing was like, oh, geez, who's going to want to buy? Yeah, all that went up in the air. Then, we're back
in an equity raise. They're going to dilute shareholders.
Yeah, we're back. We're sort of back in the same spot. But hey, good for the news. So they, as we said, 20% share in De Grey, but that's been diluted a bit because they didn't participate fully pro rata in the De Grey equity raise, and the 50% non-operating interest of Gruyere with Goldfields. And this latest Data Room article pretty much alludes to Gold Road being for sale. I don't think it can be any more explicit. So, because let's go through some of the talking points. Any group that buys Gold Road not only has the best seat at the table to buy De Grey or block any other group that tries to, but also in a strong position to buy South Africa's goldfields.
To buy goldfields?
To buy goldfields.
Oh, wow.
Yeah, so that's...
Jesus.
Yeah. Gold Road has the first right to buy Gruyere mine should Goldfields ever want to sell out. In the past, Gold Road is thought to have been keen to buy De Grey, but the latter has not been interested in a tie-up. So perhaps when it comes to takeovers, investors should be looking on the other side of the fence and watch Gold Road more closely. Oh, bloody mate, tell you what. It's like
the buy Goldfields.
John Hughes.
The buy Goldfields is a big, that's a punchy call. It's I think a $24 billion company.
Pretty wild, yeah. There's two theories I'd have about this one, Matty. One is an existing shareholder really just trying to maybe encourage them to sell themselves if they're not already and strum up a bit of interest on that front, or advisors, basically putting up an advertisement saying it is for sale, which I hope it is that, to be honest, because I was disappointed when they came out and said they weren't doing the Greenstone deal. What they put out to the market at that point in time was saying we continue to evaluate acquisition options or something to that effect. They didn't say we're evaluating always to maximise shareholder value, which would imply we're for sale. So I hope they're for sale because you're 100% right.
I think there's a third option you haven't considered, Trav. This could be the purely independent view of Data Room.
That is the least likely of the three.
That's a long shot, Matty. Come on.
Right, let's go, bloody North Queensland. Austral, back from the dead. We talked about him before we went to Sydney, I think. The whole Austral thing.
It's been a whirlwind.
It feels like it was last week, but it was 2 weeks ago. Yeah,
all a blur.
It's
been a bit of a whirlwind and a tough time for shareholders of Austral AR1. So maybe with copper prices up around US $4.50 a pound, there might be a bit of hope. The company came out today and said, with an announcement sort of headlined "End of Receivership." So they've told Deloitte to go away and move on. The directors have the keys back. Glencore, the company's offtake partner, have bought the senior secured debt. So that makes them the senior creditor. Wingate were the group that were previously the senior creditor. Now, if you go back to the annual report, they do it by calendar year. So at the end of December 31, Wingate were owed in the senior facility $23.7 million. Then, below them you had Glencore. They had a prepayment facility which was fully drawn. Austral owed Glencore $27 million, and that was paying LIBOR plus 8.5%. And then there was also another $13 million facility. So all up, the company owed $63 million at December 31. So it'd be fascinating to know how much Glencore paid to take the debt off of Wingate's hands for. As for the operations, they've got
they probably paid par, I reckon, JD. I'd guess they pay par, yeah. I mean, otherwise, Wingate probably just didn't want to go through a lengthy process and happy to bloody wipe their hands and pay 100 cents on the dollar.
Get it and get on with it, yeah. So it's a fair guess. So for the operations, the company's got 810 tons of copper cathode just sitting on site. The operations have sort of continued while this sort of financial turmoil goes on in the background. That equates to 12-ish bucks of copper cathode just plonked on the ground there. Then you've got the ROM pads at Ant Hill and Mount Kelly. They've got about 300,000 tons of ore grading 0.73% copper that's ready for processing. But, the next big step is a recap of the business. I'm sure there'll be brokers, pitching variations of similar deals to just get the company's financials back in check. I'm sure Glencore will be pressing hard to de-risk their now pretty substantial, debt in the company so that, they're in a much safer position and that they've got a much higher likelihood of getting repaid. Austral last traded at a $84 million market cap, but we all know these recaps inevitably take a big haircut out of existing shareholders. And I think at the end of the day, just looking at Austral, they are an extremely high cost, small scale copper miner. They produced 1,800 tons rather of copper in the March quarter. They operate on super thin or, more often than not negative margins. So when you see things like rainfall, heavy weather events, they just whack them so hard that the company doesn't have much, sort of sturdy foundations to sit on. They've suffered just in the last few months alone from a lack of feedstock, power outages, disruptions to the transport routes. So maybe with a copper price in and around where we are, or a copper price that goes a bit higher, they can get there. But, we sort of know from knowing that area around there, it's a bit harder than you kind of think to build a bit of scale to it. So
JD,
kind of see.
I've got a theory about this recap. It's my crystal ball prediction. Any new equity that goes into this recap, where will that value go to? It'll just go
There's
to Glencore.
one winner here, mate.
It'll go to Glencore.
The company that takes their pound of flesh.
Mate, to get saved by Glencore, your problem's probably just started.
Continue to be with Glencore.
Yeah. Well, eyes peeled for what the recapitalization looks like, because if you are putting money into this going forward, you're making quite the punt on copper maintaining where it is and the company being able to sort of strap down costs for an extent to be able to pay it down. But it's it's a very risky play if you ask me,
mate. If you're operating on thin negative margins, JD, that is no better talk to the copper price. That is max talk. You can't get more talk than if you're losing money.
You'd prefer thin positive, but
mate, look at it. It's like triple talk. Oh, I love your work.
It's working for Eris.
Yeah, I know. Right, beautiful work, boys. Now, look, we've gone the whole show, and after our Sydney trip, is there anything you two want to say to me in front of the money miners? I'm surprised you haven't yet. Like, just in honour of this.
You were very well behaved. Is that what you're asking for?
There we go. Fucking took the whole show.
Maddie was an upstanding citizen in God's country, Sydney.
Possibly the best behaved out of the three of us on an aggregate basis in terms of who turned up the best every day. I would argue it was me.
Yeah, you slept in a bed every night this trip, which is a first for you.
Yeah, no, there was one funny mishap that I will share with the money miners on night one. I was walking home. It was about midnight. It wasn't too bad. Thought I'll go get some Hungry Jacks to just to bloody line the stomach for the next day. Walk up the road to Hungry Jacks, which was a bit away. I've come out and started walking home. At least I thought I was, and must have went 90 degrees the wrong way. And fucking Sydney all looks the same. And I was like, just kept walking. I'm like, where the hell am I? Ended up on the other side of Darling Harbour somehow. Had to walk across the bridge and but I'm like, turned it into a positive. Good exercise.
Got your steps in, mate. Well done.
So that was me bloody. So I even exercised while I was in Sydney. So just tick. Right. God.
Well done, lads.
God, geez, you got to fish hard for a compliment around here. Fuck me dead. Pricks. Righto. Thanks to all the partners who we have in the show. Brooks Airways, flying you over to catch up with anyone that's lost your money, and DSI Underground, the biggest revenue generating business in the Money of Mine cohort. We've also, Brooks Group might be close to them. That'd be interesting. Maybe not. We'll have to verify that one. Thanks, Verify. Communicating in 3D. GetWet Solutions. Silverstone, CRE Insurance, WA Waterbores, and K-Drill. Cheers, Money Miners. Good to be back.
Hooroo.
information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.